Why does every bank I talk to want my tax returns, my W-2s, and half my life story to buy an investment property?
Sounds like you're talking to the wrong banks. You ever hear of a DSCR loan?
No, I haven't. What's that?
All right, so instead of showing all those documents, right, pay stubs, W-2s, tax returns, bank statements, IDs, firstborn child, all you have to do is make sure that the property DSCR, debt service coverage ratio, cash flows, meaning that the rent will cover the mortgage.
Wait, so my personal debt to income ratio doesn't matter at all?
No, we don't even check any of those documents. The most important thing is just simply making sure that the property's market rent at least covers that mortgage or is, of course, higher.
Can you just walk me through that and just explain to me how it qualify?
Of course. I know we use a lot of acronyms in the mortgage space, bruh, but a DSCR, debt service coverage ratio, just means say the mortgage payment is $2,000 a month, which would be a miracle, say it is. If market rent is $2,500 a month for the rent, this is the mortgage, then the market rent is actually higher than the mortgage. In this case, it's 125%. So ideally, banks look for at least 100% coverage or that the rent is equal to or greater than the payment.
So as long as the numbers work, I don't have to show my personal income.
Correct. So as long as when the bank does the appraisal, that the market rent comes in at or above the mortgage payment that you're looking to qualify for, you qualify. No income docs, no pay stubs, none of that stuff. That's all we need. Market rent.
All right, that sounds good, but what are the downsides? Are the interest rates like really high?
Yeah, so look, if you don't show your income and go off market rate, sometimes rates a little bit higher. So say the market rate right now, for argument's sake, is 6.5%. This program might be 7.25%, 7.5%. Also, depending on the state, there might be a prepayment penalty, meaning if you pay off this mortgage in full or a large majority of it within 1, 2, 3, 5 years, there's a small penalty. So there's a couple different caveats. Good news, you can actually buy this in a corporation or an LLC, so you're covered legally.
Awesome. So what are the next steps?
Comment Cardone, and my team will reach out.